The PSEi is on a 7-day losing streak and is resting on a very critical support zone, while the S&P 500 has suffered its worst week so far. When will the bloodbath end? Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Outlook. So no surprises in the Philippines as we started last week, with the BSP keeping its policy rate unchanged at 6.5%, while the unemployment rate came in on Wednesday to a healthy 3.5%, significantly lower than the 4.5% reading the last month. As we mentioned, this didn't really have any effect on the markets, especially after a 2-day holiday break last Tuesday and Wednesday. But Wednesday evening, Philippine time, CPI numbers were announced in the US and they were hotter than expected. And as we mentioned, if it comes in hotter than expected, then the markets will react negatively. The main culprits for the hotter than expected CPI inflation print was auto insurance and housing costs, which are actually quite sticky components, and this sent expectations for a June rate cut out the door. The CME probabilities tumbled to a low of 16.8% versus 61% just 1 week ago, before it settled down to 27.3% after the market closed last Friday. So now the market has pushed back expectations for a rate cut even as far back as September or November. Of course, Treasury yields spiked up to year-to-date highs, the 2-year yields jumping to 4.9% and the 10-year yields jumping to 4.526%, causing the S&P 500 to correct sharply back to our 5,150 zone for most of the week before breaking down to 5,110 to end the week last Friday. So meanwhile, in the PSEi, it continued its losing streak to 7 days, ending the week at 6,659. A bit below our critical support zone at 6,687 here, where we see the convergence of the horizontal line and the 100 EMA support. Will the PSEi be able to hold this critical support zone this week? Now let's look at some of the index movers and see where we're headed. Now remember that the index movement is determined by the 30 stocks in the PSE, and the top weighted stock here is actually SM with around 15%, and some positive signs for SM as it is holding steady at the 20 EMA support level, ending the week on a positive note. ICT remains at the top spot as the most technically strong stock in the PSEi. Of course, with expectations for rates being higher for longer, our banking stocks are still strong. BDO managing to hold on to the 50-day EMA. BPI recovering from the sell-off, advancing above the 20-day EMA. Best case scenario for BPI, it hits resistance here and then bounces off support at 117. Metrobank reaching 52-week highs, ending the week at 69.95. So the next level of resistance for Metrobank will be at 74.50. CMPF also doing well. Hope that it can bounce off the trend line support here, while Monde with a healthy pullback and a rejection of this support zone here. Things are looking good, at least for these index stocks. But for the rest of the other 30 stocks, Ayala stocks continue to be the weak spots for the index, as we see AC now at the same level as it was last October. Now remember, we were in the same situation as we were last October, where we weren't expecting any rate cuts until news came in and the market started expecting 6 rate cuts for 2024. And now we are back to the same hawkish expectations where we may not even see any rate cuts this year, and Ayala is back. So the question is whether Ayala Corp can bounce off of the 600 or 584 support zone, which it has done so many times in the past. Now, we've always mentioned that AC at 580 or 600 is such a bargain that this could be where AC can finally find some buyers. So watch out for AC in the coming days. Now, if it does bounce back here, now remember that since it sold off sharply here, this can happen again, right? It sold off sharply, although it bounced back, it went lower eventually. So this scenario might happen again. So while this is a bargain at 600 or 580, we may see Ayala Corp at this level for a long period of time. Real estate stocks, of course, continuing its decline after the CPI news. Ayala Land continues its plunge towards 26.25 here, breaking support like a hot knife slicing through butter. Ayala Land is probably the top stock in terms of net foreign selling so far this year. I'm not even sure if this is a legitimate support zone because it looks like 26.25 is quite possible for Ayala Land. Now, SMPH, with a larger portion of its revenue coming from mall operations, not as hard hit but also resting at a critical support zone at 30 pesos. Again, watch out for its reaction to this level this week, and it looks like it may range trade along 34 and 30 in the coming months. Now, meanwhile, some of the index members actually suffering some heavy losses. If we look at these ugly charts, I mean, look at AEV. AEV, yikes. JGS, right? ASEN, Pure Gold. I mean, look at these charts. URC, right? URC, Nickel Asia here. And then Wilcon here, all suffering heavy losses. So at this point, with most of the index stocks trending downward, we have to assume that rallies will eventually be met with sell demand. The scenario this week for the PSEi, if we go back to the PSEi, the scenario this week could see the index with a technical bounce off of this level and encounter resistance at around 6,800. And the best case scenario here would be for the index to have a technical bounce, encounter resistance here, and then hold support at 6,659, because if it doesn't, then we are going to head down to around 6,550. SCC, we mentioned that it will most likely gap down on Monday, and it did. It gapped down to 30 pesos and it closed the week at 29.30. So the countdown begins for the 2 weeks after the X date. Let's see where it settles at around 28 or 28.50. And then this would probably be a good time to buy into SCC if you want. So on to the S&P 500. Let's look at what happened in the global markets. The S&P 500 suffering its worst week so far this year, closing at 5,129, bouncing off of the 5,110 support. It actually broke through a couple of support levels just on Friday alone. Zooming into the 2-hour charts, the S&P 500 is currently trending downwards, and a break here at the 5,110 support would mean a breakdown to the 5,050 level. So far, if we do get a technical bounce here, it may encounter a resistance here at the 5,187 and may proceed to break down from there to 5,050. But it will really all depend on what will happen to earnings this week. We do have a thin economic calendar this week with retail sales and housing numbers to start the week. But it will be earnings that will have a material effect on the market, as earnings season kicked off last Friday with the big 3 banks presenting weak guidance for 2024 despite rates staying higher for longer. Now this week, Goldman Sachs, Morgan Stanley, and the Bank of America will report, followed by semiconductors, ASML, and TSMC, followed by Netflix on Thursday. So the market is really hinged on whether these companies can deliver earnings at the same level with market expectations. Because if we look at the current forward PEs of the Magnificent Seven, they are already so elevated at 35.1. But if we look at the S&P 500, the forward PE ratio is only at around 20.8. So it's actually still a bit expensive, but most likely this will be an earning season with very, very high expectations. So for this week, it is going to be a choppy market. The PSEi is resting at a critical support level. And from the way it's trending, we could be trending lower in the coming weeks. So we will have to be on a wait and see mode, and we will have to be very selective with our stock picks. No? Hopefully you were able to lock in some of your profits from the past months, and you have enough buying power to take advantage of potential bargains in the markets. But for now, start creating your shopping list as we wait and see how low the markets can go given the current trends. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risks accordingly. And I'll see you again next week. Bye-bye.